To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
Let's now quickly summarize IndAS 40. IndAS 40 deals with investment property. What are investment property? Property that is land, building or a part of building or both held by owner or lessee for rental purpose or for capital appreciation. If a property is held for production or supply of goods and services or for administrative purposes, then we call them owner-occupied property. As far as owner-occupied properties are concerned, if it is an owned property, you will apply IndAS 16. If it is a property held by a lessee as a right of use, you will apply IndAS 116. Now, this is the crux of the definition of investment property. Then, we also discussed few specific cases related to classification. If it is land and the use is not determined, you will classify it as investment property. If employees have occupied the property, then it will be a part of property, plant and equipment. If a property is used for both the purposes, partly owner occupied, partly given out on rent, then in that case, if you can separate the parts, sell them off or give them out on finance lease, then the part which is related to owner occupied will be classified as property, plant and equipment, and the part which is let out or which is held for capital appreciation will be classified as investment property. Right. If a property is held for dual purposes and they cannot be separated, how do we classify? In that case, you have to see which portion is more significant. Is the owner occupied portion more significant or the investment property part more significant, right? So, if owner occupied part is insignificant, then you will classify that as investment property. If the investment property part is insignificant, you will consider that as property, plant and equipment. Then we discussed about the recognition criteria and the measurement related aspect. As far as recognition is concerned, the recognition criteria states that it should be probable that future economic benefits associated with the investment property will flow to the entity and the cost can be measured reliably. Only then you can recognize the investment property as an asset in the balance sheet. Now, coming to the measurement related aspects at the time of initial recognition, investment property will be always measured at cost. And cost includes the purchase price, the non-refundable taxes, any other cost which are associated with acquisition of investment property. If it is construction, again similar principles, all the costs which are incurred to bring the investment property to the condition and location to be operated in a manner as intended by the management, you will consider it as cost of investment property. What are the costs that will be excluded? Startup cost, initial operating losses, abnormal losses, all of these things will be excluded. Again, similar principles we learned in IndAS 16 as well. Then, if an investment property is acquired in exchange of another asset, then we will have to see whether there is commercial substance or not. If there is commercial substance, then you will take fair value of asset given up as the first priority, and if that is not available, you will take fair value of asset acquired. If both of these are not available, then you will take carrying amount of asset given up. If both of them are available, you will take the one whichever is more evident. If the transaction lacks commercial substance, you will recognize the investment property acquired at the carrying amount of asset given up. If there are deferred payments beyond normal credit terms, then you will arrive at the cash price and account for the investment property at the cash price. The additional amount that is paid will be treated as interest and it will be charged off in the P&L over the period of the payment. Then coming to measurement after recognition, the entity will apply only the cost model. The entity cannot apply the revaluation models. We will take cost model under IndAS 16, that is initial cost less accumulated depreciation less accumulated impairment cost, that will give you the carrying amount. We will not use the revaluation model, but we will compute the fair value, we will arrive at the fair value and we will disclose that in the financial statement. As far as investment property which are held by the entity as a lessee, we will apply IndAS 116. If an investment property is classified as held for sale, not in the ordinary course of business, as investment property itself, it is classified as held for sale, then in that case we will apply the principles given in IndAS 105. But largely it will be covered by IndAS 16 or IndAS 116 as applicable. Then subsequent cost, if we talk about, if there are repairs and maintenance related costs, they will be expensed off in the P&L. Then if there are replacement related costs, the replacement cost, if it meets the recognition criteria, that will be added to the carrying amount of investment property and the existing carrying amount of the replaced part will be de-recognized. So, you will recognize the replacement cost and you will de-recognize the existing part which was recognized, which is a part of the investment property. Then we understood about transfers of property from one category to another, that is from IndAS 40 to IndAS 2 and IndAS 16, or from IndAS 2 and IndAS 16 to IndAS 40. So whenever a property ceases to meet the definition of investment property or starts meeting the definition of investment property and there is an evidence of change in use, in such situations you will transfer the property from one category to another category at the carrying amount only. Fair value is not relevant. Then we discussed about derecognition related aspects. An entity will derecognize an investment property at the time of disposal or when it is permanently withdrawn from its use and no future economic benefits are expected to flow to the entity from its disposal. At that point of time, you will derecognize. Whatever is the difference between the net disposal proceeds and the carrying amount, it will be treated either as profit or loss depending on which one is higher, and that will be recognized in the P&L. And then we discussed about a lot of disclosure related requirements for investment property.